your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Elon Musk is making plans for an artificial intelligence startup that will rival OpenAI. This according to the Financial Times, which says the billionaire is assembling a team of researchers and engineers to work on the project. The newspaper, citing sources, says Musk also is holding discussions with Tesla and space exploration technologies investors about helping to fund the project. Apple ramping up testing of fresh Macs with processors on par with the current M2 chip, making headway on key new machines that could help reverse a sales decline. BlackRock's assets swelled to $9.09 trillion in the first quarter. And with more on BlackRock's quarter, here's Bloomberg's Denise Pellegrini.
Net inflows into all of the firm's funds totaled $110 billion, and long-term investment products, which include mutual funds and ETFs, well, those added about $103 billion, and that beat the $84.1 billion average estimate of analysts in the Bloomberg survey. The Federal Reserve began hiking rates aggressively early last year, of course, in an effort to tame inflation, and that's been testing the resilience of many small and mid-sized lenders. And deposits at commercial banks have tumbled, especially in the weeks that followed the mid-March collapse of Silicon Valley Bank and Signature Bank. BlackRock, meantime, has weathered the upheaval as clients poured a net $8 billion into its cash management products in the first quarter. Charlie.
And that's Denise Pellegrini. BlackRock up today by 3.1%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session. We'll head over to our TV colleagues, Maddie and myself, with Romaine and Katie. We'll count you down to the closing bell, wrap up the Friday trade and the week. Having said that, a couple stories we did want to bring to your attention, and that includes one, our team catching up with Mohamed El-Arian out there in D.C. Of course, you know, the World Bank and IMF spring meetings underway. And one of the things he's concerned about, Maddie, is the central banks risking losing their autonomy if they're not publicly accountable over past mistakes, including playing down the risks of inflation that has, you know, really punished consumers and hurt economies. You know, that's interesting. I think credibility to me is more the thing if potentially, but his opinion.
Yeah, no, it's such an interesting point, because I think just in terms of the average consumer, I don't think that they necessarily understand and think about the Fed as only having like two tools in their tool belt to fix inflation. So he does have an interesting point. Have they communicated that to the average American? And also, I guess the bigger question that we were just talking about in the break, is the goal of 2% something that's too lofty? And therefore, if we never hit it, what does that do to the Fed's credibility moving forward?
No, it's interesting. I mean, I don't know. I guess I would also argue that so many people missed this inflation surge and the stickiness of it. To be fair, I guess you expect central banks to be kind of more on it, if you will. But I don't know. And what if we do get ultimately back to 2%? This whole idea of sticking to the target, like if we get there. Many would also argue that some of the macro forces, things that you and I talked about a lot this week, Larry Summers too commenting on maybe, you know, the U.S.'s place in the world economically, geopolitically, maybe that's changing, and China is certainly trying to step up and assume a much, much bigger role.
Yeah, it feels like whatever your bet is on inflation, it'll eventually come true. If you bet that it was transitory, then maybe someday that will be true. It just might have taken 5 years for us to get there.
You know what wasn't inflationary? Apparently Larry Fink, CEO of BlackRock, his total compensation down 30% from the previous year to $25.2 million for 2022. I know, cue eye roll, but nonetheless, some of this, we talked about this a little bit more earlier in our bank roundtable, which if you missed, check it out on our podcast feed. But again, Larry Fink, BlackRock cutting his pay 30%. All right, just a few minutes left in the trading session. Time to head over to our TV colleagues, Romaine and Katie. Time for Beyond the Bell on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell. We're going to be joined in just a minute with our global simulcast with Carol Massar and Madison Mills. But welcome to our audiences across all of our Bloomberg platforms. And there we have them there. Little technical glitch, but we always, no way I would close out a Friday without my friend Carol Massar. Carol,
Thank you.
Let's really talk. Katie and I were just really talking. I'm serious, Carol. Don't you snicker.
I wasn't. There was no sarcasm there.
Okay, all right.
This time there was no sarcasm.
This time. All right, well, what about the market? Any sarcasm there? Because you have a market, I think, that is still really trying to sort out things. Yeah, we're pretty much red across the screen, but I'm not sure you can extrapolate too much into that. This is a range-bound market and really has been now for the last few months.
Yeah, I don't get it, to be quite honest with you. I think the equity market all over the thing, we saw selling in stocks, we saw selling in bonds, right? That correlation, Katie, not supposed to be there, although it's something over the last few years we have seen at times. I think it's really hard to make any very distinct conclusions at this point.
Yeah, it feels like there was no place to hide, Carol. I mean, you look at bonds selling off, you look at stocks selling off, Maddie. Where's the safety?
No, it just feels like, I mean, and we've been saying this for so many weeks now, low volume continuing to be the story every single week after week. I just feel like there's a lack of conviction in any sort of decision making on this trade.
Yeah, absolutely. Here, I think it's going to be interesting as we look ahead to next week with all of the earnings. And you're going to get a more varied earnings picture because it's not just going to be banks and financials, but you are going to start to hear from a Netflix, from a Tesla, from a Procter & Gamble, for that matter. So we're going to get a little bit more of a cross-section, I think, of corporate conditions and economic conditions as well. Nevertheless, here we close out the week here on this Friday afternoon with red pretty much across the screen here. The Dow Jones Industrial Average lower by roughly about 150 points, or about 0.4% here on the day. We should point out that on a 5-day basis, the Dow Jones Industrial Average is higher by about 1%. Similar story for the rest of the indices out there. The S&P down 0.2% on the day, but higher on the week. The Nasdaq Composite down about 0.3% on the day, but higher on the week. And the Russell 2000 looks like it's going to close out the day roughly down by about 0.9%.
All right, no surprise. We've talked about it, but we ended up actually, obviously, focusing on the banks today. We did get some outperformance. The KBW Bank Index up more than 1% in today's session. And Katie, you're going to get into the industry groups, but if you look at the index, it's kind of an even split of about 10 names in the KBW, up 12 lower. So it's not like everybody was all in on the banks today, that's for sure.
But even still, if you take a look at the industry groups, I mean, this really tells the whole story. It was lower overall, more red than green, but then you look at the green. You look at how far that bar extends. The banks industry group rallying 3.5%, a lot of that coming from JP Morgan, rising about 7% or so. You go down the list from there, the gains are a lot more muted. You have transportation up 0.4%. That's second place to the bank's 3.5% rally. So then you go down, you look at what's dragging the indexes down overall. It's real estate, it's healthcare, it's utilities, and Carol, it's food and it's staples.
All right. Okay, so that's a look at the major industry groups here on this Friday. Let's get to some of the individual gainers. And I got to go to the banks because they are top in the S&P 500. Number one gainer in the S&P 500 today is JP Morgan Chase, pretty much finishing just off its best levels of the session. So good for a gain of almost 7.6%. You know the story. Boosting net interest income forecast for the full year, $81 billion from about $73 billion. Analysts weighing in saying the first quarter results impressive as the bank's revenue and earnings per share were ahead of consensus. So really some standout performance there from JP Morgan Chase. BlackRock also top in the S&P 500 today with a gain of about 3%, finishing off its highs of the day. It was up almost 5% at its highs. What's caught everyone's attention, the amount of money that flowed into the world's largest asset manager. Let's try that again. It's Friday.
It's Friday.
The world's largest asset manager. Assets swelling to more than $9 trillion in the first quarter. So really, you saw investors coming into BlackRock, giving them money to invest here as a result of some of the banks collapsing. So they were definitely a beneficiary. Also, BFF Corp, home to such brands as Vans, North Face, Timberland. This was also a top gainer in the S&P 500, up about 3%, though at its highs, up as much as 8%. Goldman Sachs upgrading the company to buy from sell, saying strategic actions are starting to improve the firm's profitability outlook. So that's a look at some of the outperformers today, Maddie.
All right, well, let's get to the downer decliners of the day. I'm going to start off with Boeing, which is down by a little over 5.5% on the close here. We've been talking about this. Boeing falling after the playmaker pausing deliveries of some 737 MAX jets over a parts issue. You never want to hear that. That is taking that stock down today alongside Spirit Airlines and some of the other airlines from the week after earnings as well. Then we go over to Infosys, and this is really important to watch because this is our bellwether for corporate spending. They forecast sales that lagged estimates and warned customers in key sectors like finance they are pulling back. That's a sign of just how much these corporations might be tightening up their budgets as they prep to handle and weather the economic conditions to come for the rest of the year. The CEO of Infosys saying earlier that they saw unplanned slowdowns coming in on projects this year. So really interesting to watch. And then we've got CTLT closing down by over 26% on the close. Romaine, I looked this up for you. The worst performer on the S&P this week, plunging the most ever as the drug and vaccine contractor said its financial results will be hurt by high costs and production constraints at 3 plants, and that dragged down the entire healthcare sector today as well.
Pop quiz, what was the second worst performer in the S&P 500?
I'm going
Dish
to pull it
Network.
up. It was Dish Network.
All right, she got it. I do want to take a quick look at yields here because
pull
it was an interesting move that we had. I mean, we talk about last week's rally that we saw in short-term treasuries, and that really flipped to a sell-off this week here. Now pushing 2-year yields higher on the day, up by 12 basis points, and on a weekly basis, it basically amounts to about 10 or 11 basis points higher. But you saw similar moves on the shorter end of the curve with the 3-year and the 5-year yield. On the day, the 10-year yield higher by about 6 to 7 basis points, right around at 3.5, which according to Katie Greifeld is a magnetic line in the sand. And your 30-year yield up right around at about 3.7%.
Forgive me for being too focused on a level, but 2-year treasury yields, I mean, still down near 4%. I think there was
said that with a lot of inflection. You're like George Costanza here.
I've been practicing.
The 2-year.
I've been practicing.
You
know, my TV voice. I got to work on it. But there was a great column from Cameron Kreis earlier today, our macro man, if you will, on the terminal.
Wow.
He made the point: if you have sticky inflation, if you look at sort of the details of some of those UMISH numbers, you could make the case that 2-year treasury yields are way too low relative to what this Fed has communicated and how sticky inflation is. I don't know.
Well, isn't Jamie Dimon kind of saying that they're too low and others?
Higher for longer, man.
Right? And yeah, really interesting. And now we're pricing in, the swaps market pricing in maybe another interest rate increase this year at the June Fed meeting.
Well, yeah. Well, almost 2 now. I mean, which
and
I
that's
think
what
is
I'm saying. I don't know. Is it just, again, a day-to-day swing here?
Well, and also we keep getting conflicting Fed speak. We were talking about Waller earlier, but then you had Goolsbee who said the Fed should be careful, that credit impact could still be bad. And I called Steve Matthews to ask him specifically about this. Did Goolsbee say that after bank earnings? And he said them after JP Morgan came out this morning. So that didn't change his narrative on that.
Yeah, well, we'll see what happens next week. I mean, we're going to get more Fed speak, and I do want to kind of push ahead to what we're going to get next week. And I am still focused on earnings, and more importantly, the commentary we get. I think we did learn a lot out of what we heard from Jane Fraser, out of Charlie Scharf, and of course out of Jamie Dimon today. We're going to get more bank earnings, including Bank of America, Goldman Sachs, and Morgan Stanley. But then I think, like I said, you look ahead to what I like to see is like more of a cross-sectional picture here, because of course you are going to get Tesla, Procter & Gamble, Netflix, and a few others as well in the week ahead, guys.
Well, we've got Fifth Third Bancorp, right? A lot of the regionals, as you say, key core. I think these are going to be really important. American Express, what it says about the consumer. Again, a broader look, like you said, Romaine, in terms of what's going on in the financial sector.
I mean, this has to be one of the
You
first
love earnings,
season.
don't you, Katie?
I do like earnings.
Come on.
So easy.
I don't typically pay attention too closely to those regional banks. I think that's safe to say.
Nobody does
That's
normally.
the thing. No one really, I mean, compared to the big banks, I know that you watch everything.
Everyone said that. No one
Romaine.
pays
Well,
attention.
you're like 3-level, what is it that,
I'm
of course
I'm
you
level
pay
4.
attention. Oh, level.
A level 4 candidate. Yeah.
I'm just making up my own levels. Katie,
Yeah.
this is for you.
Yeah.
You know what's happening on Monday?
I'm scared.
The Boston Marathon.
The Boston
Are
Marathon.
you running in this? I know you're into running, right? You like
I'm
to just
not.
put on shoes, go outside, and just run in random directions.
You know,
I don't know why
like-
that's a thing, but you like it.
I really like adrenaline, so I really like the shorter races.
Yeah.
A marathon, I mean, I do long runs on the weekend, but I haven't yet gone up to the marathon. I'm
Like
more
the
of a
100-yard
5K.
dash? Is that what you're into?
I ran the half mile in college, but
Isn't
now
this showing
That's short.
it's
Wow,
short.
I could
It's
do
quick.
that. Half
Yeah. How fast can you do it, though? It's sort of like the weekly quiz.
It's time.
Don't forget, guys, did you file your taxes?
There's always a catch.
Did everybody file their taxes? You know, you got to do it by Tuesday, or at least file an extension.
Taxes due on the 18th.
Yeah,
I think we have to go.
Got to help out the revenue coming into the government. You know, they got to. They got a debt
Yeah, we
ceiling
got to
they got
help
to
out
deal
the
with.
government.
All right, guys, that's a wrap. A really, really busy week. We've got another one coming up. Ciao for now, as they say.
I love the government, especially when they take money out of my paycheck.
Yeah, what's not to love? All right, our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We do call it Beyond the Bell. We'll see you again, same time, same place on Monday. We did talk about this a little bit in our simulcast with Romaine and Katie. Carol Master here with Madison Mills and Bloomberg Quick Take live in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals. We have to talk about retail sales, Maddie, because down for a second month in March, indicating household spending is cooling with Americans challenged by high inflation and rising borrowing costs. And our Bloomberg economics team specifically noting that this second straight month of lackluster retail sales reflect consumers' expectation that the economy will worsen. And then we had spending on food services. It's the primary proxy for services in the retail report, nearly flat in March, hinting at weakness in the consumer demand for discretionary services. So bottom line, it was a little bit of a mixed report.
A little bit of a mixed report, especially when you look at the oil picture as well, which is another thing consistently changing. We've seen gas prices up for 17 days in a row here. So a lot to look at when it comes to the consumer and retail space. So we got a great guest on this. This is Mary Lou Gardner, Associate Partner for Consumer Packaged Goods, Retail and Logistics at Infosys Consulting. She joins us on Zoom from Naples, Florida. Mary, thank you so much for making time to chat with us today. Let's start on this retail sales data. How does what you're seeing in your role support or refute the numbers that came out today?
Well, I think it actually supports the numbers that we saw today. We're not all that surprised, given the fact that we're in that balance of while inflation is slowing ever so slightly, and there's still the loom of the recession. And when in retail, it's such a sensitive subject for consumers. And then we have the fact that a year ago, people had a lot more money in their savings accounts, and they've been spending some of that. Now they're taking a step back and saying, oh no, what do I have in front of me? Are costs going to go down? Or are they going to go up? The gas prices are going up. And the industries that are slowing down are the ones that you would expect to be kind of the leading indicators of what would slow down when we're heading into a place where consumers are pulling back on their spending.
Like what specifically?
So specifically, I mean, the slowest was just kind of the overall general merchandise retailers, along with electronics, which have continually been, consistently over the last 6 months to a year, been, slowing down, along with things like building supplies, where building supplies were actually on fire a year ago. And, they're really starting to see people pulling back and saying that's more discretionary than it is for, say, I've got to buy my groceries. I still need to put gas in my car. So there's just the pullback in some of the industries that respond the most when people are pulling back.
This morning, off of the retail sales data, I put out a poll, on Twitter. And I said, are you pulling back on spending? And just a little sampling, but 60% said yes, 40% said no. So it does feel like there's a little bit of a tone change. Is it, though, Mary, that people have less money to spend? Or is it that they're just a little bit nervous about what's to come? And so they're starting to kind of like a squirrel, squirrel away just in case. What is it?
I think it's a combination of both.
Okay.
It is definitely a combination of both. I mean, we saw travel spending go through the roof over the past year. There were people who just kind of let loose a little bit after some of the COVID restrictions, and they had extra money to do so. So there's the people that the credit card debt's gone up a little bit. They're starting to get conservative. But then there was probably your 40% could have been more your higher income demographics that are more recession-proof or more inflation-proof or still willing to spend in the market. So I think there's a combination of several different factors that are contributing.
Can we talk high income for a second? Because you mentioned that the play is to focus on high income shoppers in the retail space more broadly. How high income exactly? Are we talking middle class, upper middle class?
Upper middle class, because, so I'll just use Walmart as an example. We're in a subset of their stores where the surrounding demographics support it. They're bringing in higher end products, which they've always been very conservative about doing that. One, they didn't want it on their shelves in a lot of their places where they could lose it to shrink and theft. But they're trying to, when there's a difference between a premium product in a mass retailer and a premium product in a luxury retailer. So they're trying to attract a consumer that has a little more disposable income, but it's not that target the high income, because they're still shopping in the premium lanes. And that's why that sector can tend to be even way more recession proof.
That interests me because I would have thought that Walmart would double down on what it's best at in this time, which is providing, I don't want to use the word budget, but like more bang for your buck items for folks who may be struggling in this economic environment. Do you think it's a good move for them to double down on offering some of those slightly pricier items?
Well, take that with the grain of salt of that they're only going to do it in the markets where that they can actually afford to do it, and people will buy those products. But Walmart is always going to be one of the value players. But they've had their margins contract. They had inventory problems. They've had supply chain issues. They have had to struggle and still be able to. See if they're seeing their consumers, their lower income consumers spending less and their baskets going down, they're still trying to figure out how to balance it, right? They don't want to lose that consumer, and they won't, because that consumer doesn't have too many other choices.
Mary Lou, and help me out, and maybe, I'm kind of scratching my head over what you're saying. I do find it interesting too that, that they're going to maybe higher end stuff at Walmart. And I guess they're trying to go after a better margin, which we know in these stores, the margins are really, really slim. Having said that, what's the read on the demographics of who are going to Walmart? Has something changed dramatically?
Well, it hasn't, because it's interesting. There is still the higher income families that shop at Walmart, because they're also tend to be fairly conservative and want to keep that money in the bank. So there is still some of that when you're talking like your upper middle class, I would say. So I think they're just trying to balance that and make sure that they've got a solution that is going to meet all of their customer needs. But that whole strategy is not at all at what their core consumer. And so they're still going to have the offerings and have the value play. But that's what compresses some of their margins. If you look across their beauty offerings, their OTC offerings, they cut their prices to make sure people are buying their products.
Hey, we just have about a minute and a half here left, or a minute. So you do look at logistics, distribution, fulfillment, which is such an important part of, the consumer story, the retail story. It's also a real estate story. So just got about a minute. What would you say about that space? Are companies, whether it's an Amazon, whether it's a Walmart, cutting back in a big way on that distribution and logistics part of their business?
So they're trying to make that much more efficient and productive for them.
Does that mean automation?
By being fulfillers to other, so Walmart has offered some of their services out when their trucks aren't full. They're moving other people's goods. So in that logistics space, and then in the whole logistics, warehousing, supply chain space, it's all about automation, about leveraging AI and robotics to create a much more efficient and lower cost to serve, because you still you've got the trucks on the road, you've got the fuel costs, you've got to figure out a way to make that more efficient. So the launching of micro fulfillment centers, the launching of commingling product has been, it's a big trend right now.
Well, it's like a plane, right? You want to have all the seats full. You don't want to fly across country, and you do what you can to fill it. And I'm assuming those distribution centers, they want to make sure that they're moving along at full capacity, or at least close to it. Mary, thank you so much. Mary Lou Gardner, Associate Partner for Consumer Packaged Goods, Retail and Logistics at Infosys Consulting, joining us via Zoom from Naples, Florida. All right, you're listening and watching Bloomberg Business Week on this Friday. Yeah, it's Friday. Carol Massar along with Maddie Mills. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We wrap up the week. We head into the weekend, and the Dow Jones Industrial Average up for a fourth week in a row, up 1.2% this week. This week, the S&P was up 0.8%. NASDAQ on the week higher by about 0.3%. Today, a move lower. S&P was down 8, ending the week 4137, down 0.2%. The Dow today down 143, drop there of 0.4%. NASDAQ down 42, a decline of 0.4%. Tech stocks tumbled. Bond yields surged this week as worries about the banking sector eased and traders upped their bets that at least one more rate increase could be in store from the Fed. Today we had the 10-year yielding 3.51% with the 2-year 4.08%. Spot gold down 1.7% to 2004. West Texas Intermediate crude up 0.6%, 82.66 a barrel. Bank stocks front and center this week. Indeed, financials will be front and center next week for earnings. Today we had J.P. Morgan Chase up 7.5%. Citigroup today up 4.8%. Wells Fargo, though, lower, little change, down 2 cents, down less than 1/10%. Recapping, stocks lower, S&P down 8, down 0.2. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, you are listening and watching Bloomberg Business Week, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could qualify for up to $26,000 per employee if you kept them on payroll during the pandemic. It's simple and easy to see if you qualify. To learn more, just head to getrefunds.com. All right, we do want to talk a little bit more, learn more about the crypto space, because investors, no doubt about it, Maddie, this week, heading into the crypto-related area, stocks specifically. And again, today we saw that move. This as Bitcoin was holding above $30,000 after going above it earlier this week for the first time since June. So we had a lot going on. So let's get to it, our weekly check on the world of cryptocurrencies. And back with us is Rob Frasca, managing partner at Cosimo Ventures, joining us via Zoom in Boston. Rob, nice to have you here with us. I feel like the whims and fancy of crypto, depending on the week, depending on the day in the news. I have to ask you, you were a Navy fighter pilot during Operation Desert Storm and after the Gulf War ended. Little cheeky here, what's trickier, being a fighter pilot or navigating through the crypto space?
It's probably about the same. The only difference is you can't get killed in the crypto space, right?
Some might beg to differ.
I don't know. Have you talked to Sam?
Well, I guess you can, right? I guess you can.
What's the case for investing in it right now? And maybe I'm being a little I don't know, devil's advocate here. A lot of FUD,
Carol. Yeah.
I know, I'm being cheekier again. Like, why would you kind of invest in this space right now when we're still really trying to figure it out?
Well, look, believe it or not, I'm an early .com guy. So I started the very first financial service on the internet back in '93. I was 29 years old. And Intuit wound up buying the company. I mean, we had the first stock quote server, first mutual fund site. I put over 100 financial institutions on the internet. I did another company in the AI space. Anyway, I've done a lot of companies, a lot of tech companies. And I see what's happening in blockchain and crypto almost in the exact same light. You're absolutely right. It's early, just like the early days of the .com, right? You kind of get this speculative phase. There's a bubble. Everything gets excited. We get out over ahead of our skis. The bubble kind of pops, and then all of a sudden, people realize, wow, this technology is actually really profound. And then the big boys kind of come in. The real players, the real institutions come in. And we kind of move, right, from this kind of early adopter phase to kind of the early majority phase. And when that happens, hang on to your seats. That's where the alpha is. Now, there's alpha early, right, but it's just not at scale. When you go to that mainstream majority, that's when you get the alpha at scale. So as venture capitalists today, we're all in on blockchain. We're all in, and crypto is blockchain in a lot of ways. And so for us...
Yes and no. Yes and no.
I actually think that it's bigger than the internet itself.
No, but crypto being blockchain being crypto, like, yes and no, right? They're not apples to apples. I mean, I understand.
They're not. But you know what happens is most blockchain technology are networks.
Yeah.
And so the value exchange in building a network is the token of that network, which is crypto. So so from an investor kind of value capture perspective, you got to pay attention to both. As venture capitalists, we invest in equity and we invest in tokens as well. So what I look for is this kind of magic moment where you go from that speculation to realization, and it generally is signaled by what the institutions are doing. Right? Are they, are they even in? Are they
what institutions, Rob?
Right? And when I say institutions, they're traditional guys, right? So, like, I don't know if you guys saw, Avalanche just did this deal with a subnet, called Spruce. like that's an indicator, right? You got Wisdom Tree on board, you got T. Rowe Price, Cumberland.
Are they really on board, or are they just being
no, they're playing. They're not on board. They're not using it, but they've got teams of people looking at it, right? And that's how it starts. Is I would go to investor conferences, 5 years ago, and there was nobody there from these bigger institutions. Now they have a team. Now they have teams of people,
okay.
Right?
I have to say, when all this first started coming out, and I was trying to get my head around it, blockchain I understood in that how you could use that to transact, right, and potentially make it more secure. I'm still not quite sure about crypto. So can you have, the blockchain kind of take off without really having the crypto component to it? Or does there you know what I'm saying? Like, help me here, because you're right. T. Rowe Price is, you said test driving a new version of the Avalanche blockchain. They're trying to figure out how to use it to make financial transactions more efficient. So I get it. Like I get it with like ownership of cars and homes and stuff and art and like all of this stuff, IP, intellectual property. I get that.
Sure. Yeah. Well, ultimately, if you think about it, right, the old business model is if I don't know you and you don't know me and we want to have a transaction, what do? We put somebody we trust in the middle of us,
right?
A bank. And what's the business model? It's pretty simple, right? The bank gets paid. They get a fee to clear the trade, okay, or whatever it is we're doing. That's the business, right? Well, what happens if we replace that bank now with a network? And instead of one person clearing the trade, the entire network has to clear the trade. So if the entire network of all these millions of people have to clear the trade through consensus, through the tech,
right?
How do we pay people? Well, that's where crypto comes in. So the network, Ethereum, right, is clearing these transactions, that's performing all these operations.
So
how do people get paid? With the Ethereum token.
So isn't it just another? Are we then creating another middle layer? It's just different.
Well, you always need a middle layer, right? You need to have a layer that clears the trade. Okay. The issue is, do you want a single point of failure, right? So a bank is a single point of failure. A blockchain is a big network of people. So by definition, it's not. It's resilient.
Unless it's run by Sam Bankman-Fried.
That's a single point of failure. That's not a network, right? That wasn't blockchain. That was the old way of doing things, right? So, and in fact, I actually, it kind of, it's not funny, all right, in any way what happened, but it's got to make you got to look at it and go, wait a minute, we've got this entire industry built on the concept of decentralization and networks, and what's the first thing we do? We create centralized exchanges to trade this stuff, right? It's silly. Right. I mean, it's silly.
It's like the antithesis of what it was supposed to be all about.
Exactly.
Okay. So we have about a minute and a half left. So what's the investment play for you right now as a venture capitalist?
So I'm looking at a couple of things. I think there's an interesting word that you got to get familiar with. It's called on-chain finance, or OnFi. What on-chain finance is, or OnFi, is basically traditional markets, traditional industries and players using blockchain to solve their problem, make them more resilient, make them more transparent, make them more efficient.
Is this like what T. Rowe's trying to do with Avalanche? Is that
exactly? It's like Archax is doing. Securitize did a deal with tokenizing KKR. In fact, our venture fund is tokenized, so you can invest in our venture fund by buying a token. Now, it's a security token. You got to do the KYC, AML. It's a full-blown security, right? It's an offering, a securities offering. So I think as an investment, that's important to look at, and we look at that. Another big area we're looking at is Web3, particularly around royalty management, those kinds of things.
Can I ask you just real quickly, 34 seconds? Are we going to need a consistent token if we're going to start playing like this? Does it make sense to have multiple tokens? Again,
yes. Well, does it make sense to have multiple networks, and then each network has a token, right? So you may have a network that, let's say it's Facebook, like it's a social media network. You don't want a social media network operating a mutual fund network, right? So you're going to have two different networks.
So we could have a network, you're saying, for mutual funds. We could have a network for real estate transactions, right? Is that what you're saying? ultimately.
That's exactly it. That's exactly it. And you might have closed networks that only have specific trading partners, and that's it. And by the way, different use cases have different needs, right? Some networks need to be high velocity, high transaction throughput, right? Instant finality. Whereas other networks, there's only a couple transactions going through it every now and then. It doesn't need to be that high speed.
Okay.
And, so what we do with venture capitalists is really look at that landscape.
Rob, we got to run. Hey, thank you so much. Rob Frasca, managing partner at Cosimo Ventures on Zoom from Boston. All right, back to World and National News, back to DC and Nancy Lyons. Hey, Nance.
Thanks, Carol. The Supreme Court says it will extend access to the abortion pill, while the full court considers whether to side with the lower court that wants restricted access. The hold is for 5 days and comes just hours before the restrictions on mifepristone were set to take effect. Anti-abortion groups have until Tuesday at noon to file their response. The Biden administration says the loss of the drug would be profoundly damaging. Mifepristone was approved by the FDA more than 2 decades ago, but abortion opponents now contend it is unsafe. President Biden is applauding the Justice Department's arrest of Jack Teixeira in connection with the recent Pentagon leak. In a statement, he says he has directed the military and intelligence community to secure and limit the distribution of sensitive information. Bloomberg's Ann Mostu was in the Boston courtroom today for Teixeira's first appearance.
He showed up in a beige jumpsuit, not showing much emotion. He's a small-built man. He's 21 years old, so he really looked like a boy. He said very little, so they read the charges and asked if he understood, and he was handcuffed again. His father quietly said, "Love you, Jack," and he quietly said, "Love you too."
Bloomberg's Ann Mostu says the charges include allegedly accessing and disseminating classified defense information, and if convicted, he could see a minimum of 15 years in prison. Attorney General Merrick Garland says investigators have been tracking a sprawling fentanyl trafficking operation, and today he announced indictments against 28 members of Mexico's powerful Sinaloa cartel.
The cases we are announcing today exemplify the comprehensive approach the Justice Department is taking to disrupt and hold accountable those who bear significant responsibility for this fentanyl epidemic.
Again, Attorney General Merrick Garland. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here on Bloomberg. The Dow, the S&P, NASDAQ, they declined today. Was a winning week. On the week, we had the S&P 500 index up by 0.8%. The Dow this week up 4 in a row, up 1.2% on the week. NASDAQ this week up by about 0.3%. Today, though, red on the screen. That's where things ended. We had the S&P down 8 points, a drop there of 0.2%. The Dow down 143, lower by 0.4%. NASDAQ down 42, a decline there of 0.3%. Traders are upping bets that at least one more interest rate increase could be in store from the Federal Reserve this year. 10-year yield 3.51%, 2-year 4.09%. Today we heard from a number of big banks, including J.P. Morgan Chase, Citigroup, Wells Fargo, and PNC. Cheryl Pate is Senior Portfolio Manager at Angel Oak Capital, and she was our guest right here on Bloomberg Business Week.
I think we've seen some stability starting to come out in the data. Clearly, the big banks had been beneficiaries of some of the flight out of the regional banks, but deposit betas held in, I think, better than expected.
Today, J.P. Morgan Chase up 7.5%. Citigroup up 4.8%. Wells Fargo, lower little change, down less than 0.1%, while PNC Financial Services Group was up by 0.4%. Spot gold tumbled $35 the ounce, still holding above 2,000 at 2,005, a drop today of 1.7%. Bitcoin up 0.8%, 30,529, and West Texas Intermediate crude was up 0.7%, 82.69 a barrel. So again, recapping here, Bank Friday, S&P lower by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, you feeling okay?
I'm feeling 100%. Here's the thing. Number one, I went out late last night. Margaritas, too many of them, so that's part of it. But that said, took a COVID test yesterday, came back negative, and I think by Monday morning, Charlie Pellet will be back.
So it's the
Subway Boys has a tiny hangover.
I'm feeling okay, but what can I tell you? I like people. I like bars.
I know.
I love it, Charlie.
All right, well, I'm glad it's not COVID, and I'm glad it's just alcohol.
Exactly.
All right, Charlie Pellet, we'll come back to you shortly. Hey, we've been following this story. I think the world has been, certainly across the U.S., and I'm glad we could check in on it because we want to talk about the U.S. charging a specific 21-year-old National Air Guardsman over his ties to the alleged leaks of intelligence secrets. The leaks prompting President Biden to limit the access and distribution of classified material. The White House also urging social media companies to help stop the spread of leaked information. The breach described as an embarrassment to the administration. There's a lot going on and a lot to unpack here, Maddie.
There is so much going on, and it just feels like this story is developing by the second. I was just pulling up the hot headlines on it for us here. So we are going to turn to Chris Strom, Bloomberg News Justice Department reporter. He is on the phone with us from D.C. to get the latest. Chris, thank you so much for sticking with us on a Friday afternoon on this story. Baseline, what do we know?
Well, it's really an amazing story. I mean, this 21-year-old junior airman got access to a treasure trove of U.S. secrets at the highest levels and has really put the White House in a really difficult position, having to deal with the diplomatic fallout literally across the world from Europe to Asia. And the airman was charged with the unlawful retention and dissemination of classified information. He had his initial court appearance today. There was no plea entered, but he's going to come back next week for a detention hearing, and the court process is going to just proceed from here.
He's 21 years old, and Maddie's just sharing with me the fact that one of the only public images of this kid, this guy, 21-year-old, is a selfie.
It's really amazing, and he looks so young in the pictures.
So young,
and he was. I mean, you know, and it also speaks to the, you know, kind of the environment in which he released this information. He was using a gamer online chat room for for young gamers, and he was communicating with teenagers, and he was posting this information to a bunch of other gamers, a lot of whom were teenagers, and that's where initially this information came out, and then it migrated to more mainstream social media sites like Twitter. And that's all part of the investigation, how it got disseminated.
All right. So, right. And I know the investigation ongoing. I mean, how the heck did he get access to this information? And what do we know about his security clearance?
Well, he did have a security clearance. He was actually an intelligence airman. He worked in the intelligence field, and he did IT support. And so he was active duty. He did have a security clearance. And with that said, he was able to get access to investigators believe that some of the material he had actual access to, but other material he seemed to be able to find a way to get access to, which could be illegal. It's still part of the investigation how he got access to all the information he got access to. But by some accounts, there's more than 300 pieces of information that he had, and some of it at the highest level of top secret classification.
Yeah. Was he hired because he is some expert at coding or data intelligence or whatever a National Air Guardsman does? Or is he just someone who was given this access and the security clearance at his level because that's just what happens to a lot of employees there?
Well, he was a junior grade intelligence officer. He worked in the intelligence field. He was hired to do IT support. And what we've seen over the last decade is that there's very young personnel that get hired to do IT jobs, and they're given security clearances and access to classified information at a very, very young age. And if you remember going all the way back to Edward Snowden 10 years ago, he was a young contractor doing IT support, and he got access. He was able to see, sensitive, top secret classified information. And that's the same kind of situation with the airmen.
But with Snowden, it felt very, I guess, morally driven, however you want to describe it. Do we have any indication of what the motivation was for this 21-year-old?
Yeah, you're right about Snowden. And some of the other leaks that have come out over the last several years have seemed to be ideologically motivated. The motive in this case is still under investigation. At this point, it does appear that a lot of it had to do with his ego. He wanted to make himself seem important to the other gamers that he was communicating with. And he also felt that there was, some classified information that people should know about. At this point, it doesn't seem like he was trying to get it out there, not necessarily for the greater good, but because because he didn't agree with the policies in certain circumstances, and he wanted to build himself up.
And this is about his access, not he actually hacking it into anything.
That's what we don't know. That's all part of the investigation. Some of administration officials have said that some information that he would have had access to just virtue of his security clearance, and so that would have been legitimate access on his part. But there's other stuff in there that seems to come from some of the highest levels of the Pentagon that he would not have had native access to.
Well, it's fascinating. It is fascinating. And, there's obviously the information that was revealed and what that says about our intelligence gathering abilities and capabilities and the knowledge we know. That's obviously one side of it, but just the access of a 21-year-old and the amount of information that he was able to actually put out publicly. Fascinating. Chris, so well told and getting us up to speed on this. Chris Strom is Justice Department reporter at Bloomberg News, joining us on the phone from Washington, D.C. I don't even know where to begin on that one.
And it's so interesting. Sebastian, who's on our team, is flagging that this guy was the ringleader of the Discord server as well.
Yep. Friends referring to him as OG.
OG, there you go.
Oh, my goodness. All right, this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Catalan shares tumbled the most in their history today after the contractor that makes COVID-19 vaccines and a top-selling obesity drug said its financial results will be hurt by high costs and production constraints at 3 plants. The share is down today by 26.8%. United Health Group edged up its profit forecast for the year. The stock, though, down 2.7%. Lots of bank earnings. J.P. Morgan Chase rallied 7.5% after boosting its net interest income forecast for the full year. And Citigroup posted a surprise jump in first quarter profit. The stock today up 4.8%. And with that story, here's Bloomberg's John Tucker.
Charlie, its fixed income traders delivered a windfall large enough to cover the rising cost of the bank's souring loans. The bank said revenue from fixed income currencies and commodities trading unexpectedly rose 4% to $4.5 billion in the first quarter as clients reacted to changing interest rates. That helped defy analyst predictions of a drop in profits. Investors have been watching for signs of stress in U.S. banking as rising interest rates boost funding costs, erode the value of balance sheet assets, and threaten to slow the economy, potentially hampering the ability of borrowers to repay debts. At Citigroup, provisions for loan losses more than doubled to $2 billion, the highest since 2020 when deposits were unchanged at $1.33 trillion. Charlie?
And that's Bloomberg's John Tucker. And those are some of the company stories that we're following for you at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
I'm Madison Mills here with Carol Masser in our Interactive Brokers studio. We're going to have more Business Week to come, but first let's get a news check with Nancy Lyons in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Madison. The Supreme Court is temporarily blocking restrictions on a commonly used abortion pill. Justice Samuel Alito blocked lower court rulings that imposed restrictions on the drug. Alito says the hold would remain in effect until midnight Wednesday. The full court is expected to study the case and decide the next steps by next week. A federal judge in Massachusetts has ordered Jack Teixeira to be held in connection with that leak of Pentagon documents. Bloomberg's Ann Mostu was in the courtroom today.
The prosecution read the charges unauthorized retention and transmission of national defense information and unauthorized removal and retention of classified documents or material. Now, each holds a maximum prison time of 5 to 10 years, and we're waiting to find out if he's going to be charged per document because he's uploaded hundreds of documents.
Bloomberg's Ann Mostu says Teixeira will be back in court for another hearing in Boston next Wednesday. The Justice Department says it's charged more than 24 members of Mexico's Sinaloa drug cartel, including the sons of imprisoned drug lord El Chapo.
The indictments extend to every segment of the cartel's operations, Attorney General Merrick Garland said.
We have charged suppliers in China, operators of the clandestine labs in Mexico, a weapons supplier who arms the cartel with firearms smuggled into Mexico from the United States, money launderers who enable the cartel to fund its operations, and the cartel's leaders.
Arrests have been made in Greece, Colombia, Guatemala, and the United States of 8 of the 24 named targets, and sanctions imposed on 2 Chinese chemical companies. In Washington, Irv Chapman, Bloomberg Radio.
Lady Gaga is being appointed to a committee in the Biden administration. The 37-year-old will be named co-chair of the President's Committee on the Arts and Humanities. The committee, created in 1982, advises the president on cultural policy. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Madison and Carol.
All right, Nance, thanks. So more ahead on Bloomberg Business Week in just a moment, but don't forget, we've got our weekend broadcast coming up this Saturday morning at 8 a.m. Wall Street time, also our podcast feed. And in the new issue of Bloomberg Business Week, an amazing deep dive into expensive elite watches. Maddie and I caught up with the editor of Bloomberg Pursuits, Chris Rouser.
All right, we've got to talk about the cover because Maddie and I both, I think it's fair to say, have been drooling over this. But it was also a watch that made a huge splash a year ago, right?
Yes. So I wanted to do a feature on Van Cleef & Arpels, which is a Richemont brand, and they're mostly known as a jewelry brand.
Right.
You probably know their Alhambra bracelets. LeBron James wears one. But I love their watches, and they make all these crazy like jeweled watches, and then also really interesting watches technologically wise. Like they have really cool functions. And last year, you know, sometimes people ignore Van Cleef because it's a jewelry brand.
Right, that's what I think
Last year
about.
they stole the show with this watch, the Lady Arpels Floral, which has all these little flower buds on it, these little enamel flowers that pop open for each hour. So you look at your watch and you're like, what time it is? It's not efficient for telling time, but you look at the watch and you're like, what time is it? And you see how many of the little flowers are open, which reveal diamonds and sapphires on the inside.
So wait, you have to count them?
You have to count them,
All right.
and they don't open in the same order ever. It's always random. So you have to like poke around and look.
All right, that, of course, is the editor of Bloomberg Pursuits, Chris Rouser, catching up with Maddie and me. Catch the full conversation and more on our weekend broadcast, including a chat with Mike Milken and Life as an IRS Auditor, 8 a.m. Wall Street time on Bloomberg Radio. And, of course, check it out on our podcast feed. But the conversation with Chris, Bloomberg Radio, and, of course, check it out on our podcast feed. But the conversation with Chris was